Crypto has always been seen as something which is for terrorism, financing, drug dealing, whatever. You can put like all the crimes and say, hey, crypto is used for that. Right now, you have ways to prevent these things from happening. I do believe that most of the innovation that we have in crypto today happens on Ethereum through the various protocols deploying there. And essentially, if you want to build a serious product, you are deploying this on ETH. While Bitcoin has its role of a macro asset, Ethereum doesn't know where to stand. Today, I'm joined by Artem Sinyakin, CEO and co-founder of Oak Research. We cover a lot of ground in this one. Does fundamental research actually produce alpha, or does price always move first and analysis just rationalize it after? Are exchanges and market makers structurally compromised, and does any research platform even account for that? Is the VC to retail pipeline in crypto just a legal way to offload bad assets onto the public? And if AI can do research faster than any human analyst, what exactly is a research platform still selling? These are the questions most people in this industry avoid. We don't. Artem, welcome to the show. Thank you for welcoming me here. Ready to dive in, ready to talk about it. I think lots of topics that you have kind of mentioned in the intro are the questions that I get asked either during my talks with other people in the crypto industry or during events. So I think it will be interesting to cover them here. 100%. And then please walk us through your journey, right? What made you get interested in crypto? Sure. So I got into crypto in January of 2020. It was basically just a coincidence because I was going for a job in Luxembourg. But before that, I had no money left because I was studying before. I wasn't really interested in finance, but it's what pays the bills. And I kind of had a lot of money to pay back to my bank for my student loan. And so I did an internship at a crypto company in France called Maria. Back then it was called Just Mining, and they were offering node providing for validation on the blockchain. They were also doing their own miners and selling those, especially for ETH back then when ETH was still in proof of work. Um, and I just got there through an internship. Did an internship of 3 months, then went did my job in Luxembourg for a year. But I still was contributing to the company. I was doing customer support from 6 p.m. to midnight. And then once this was over, I went for a full-time job at this company. And a year later, I switched to my own media company in France, which was called Oak Invest back then. And for 4 years, we have covered everything from stocks to real estate to crypto. And at some point, crypto was taking just too much space, and the research outlets in the crypto space I was not satisfied with anymore. And so we decided to create our own. We named it Oak Research because we decided to keep Oak as the legacy, and it also sounds really like financial and fancy in some way. Um, and so we launched it in November 2024, fully bootstrapped, no external raises, and so far so good. So yeah. No, you built Oak Research from scratch, right? And most people who try to do crypto research, they end up either going full degen, right, or going institutional. But you built something in between. So who is Research is really for? I guess in crypto you have to have both sides, right? Especially now when institutions got into crypto now, they are actually interested. They are deploying their own products. I would say before 2025, you could get away with just being a full degen. Now it's not enough anymore because you have to cater to institutions as well. And I guess when you are building a research platform and not in media, you have to have this institutional grade approach in some way because you are going to talk about subjects that actually matter and that are really interesting. So when you cover those subjects, you have to take into account the fact that you will not be able to be full degen or include slurs in your research. So I guess when we built Oak Research, our goal was to target people that are proficient in crypto or are looking to get more information that you would find online or on Twitter or in the docs or in media, essentially.
Um, and so we didn't really have a target audience besides the one that was really interested into going deeper into crypto. So I guess it would cover people that are part of the ecosystem or have been part of the ecosystem for a while, as well as institutions, because they are the ones who have to do a really big due diligence in order to deploy their products, and who have to understand a little bit better what is happening. And you also have to cover some technical things, but I guess it's less important now than it was back in 2024. But I guess we will talk about this a little bit later in the podcast as well.
Mhm. So the alpha feed. The alpha feed is separate from the news feed. Most platforms conflate those two things completely, right? So what is alpha in your definition, and how do you know when you have found it?
Yeah, so essentially, what people need to understand about Oak Research in general is that most of our research is completely free. It means that you go on the platform or you go on our X and you can access everything, all the articles that we have published, completely free of charge. So you don't have to pay anything.
Mm.
Um, and we wanted to keep this way for quite some time, and we did so far. So it's been working. We don't want to keep our research to only people that decide to pay us, because we actually believe that our research that we are doing actually serves the public and the crypto space in general. But besides that, we also launched a premium subscription, which allows people to access a bunch of additional features. So you have the alpha feed, you have the daily recaps, you have the weekly recaps, you have the Oak Index, and you have the watch list. Alpha feed is one of the features that people use the most. Essentially, the goal behind Alpha feed is to only focus on what matters and actually allow people to deploy their capital either in tokens or in protocols. What we are doing is we are looking in protocols that offer yield at the moment, and we try to go through the various opportunities that are presenting themselves. It can be incentives that are deployed on a chain or on a protocol. It can be farming for a new prop dex or whatever pops up. It can be just information asymmetry that we notice in the market. For example, if we are seeing a protocol that will be deploying a huge upgrade, which will heavily affect the token, we will talk about it. Uh, and also, the thing with AlphaFeed, you have some news that get published most of the time, but most of the news people don't really care about because it doesn't affect them in any way. For example, Donald Trump buying a hamburger in New York City with Bitcoin. Like, I mean, sure, it's cool to know, but you cannot do anything with this information, right? So when we created the Alpha feed, the goal was to focus more on the news that actually impact your portfolio. So it means that new upgrades for protocols for chains and how the protocol will be impacted. It will be new opportunities in the market, and it will be some negative evolutions in this space as well, because I think these are underlooked today. So we are not afraid to say, hey, this new upgrade actually creates a new problem for the protocol, so you should be careful. So it will be a negative sentiment that we share there. It can be also neutral because we just think that the news is worth covering, and it can be positive. So the goal is basically to give anyone who uses this feed insights in what is actually happening in the market and what they can do with this information.
And is fundamental research a source of alpha in crypto in 2026? Or does price action almost always lead the narrative and fundamentals just explain it after the fact?
I think it depends what you mean by fundamental research. But for example, when we started back in 2024, you had technical breakdowns that were published by research outlets, or you would have like quarterly analysis of chains or protocols or whatever. I think these types of research are still somewhat important for some people. So, for example, if you have investors and they want to get updates on what you did in a quarter, it makes sense to publish those, but the general public doesn't really care about it anymore. What you have to focus on a little bit more, it's the thesis-driven approach. It means that you have to actually have an opinion, and you actually have to explain why your opinion is this way. Um, and I think fundamentals are today. you can get all the fundamentals you want by just asking AI to generate a recap of what is like written in the docs of a protocol or a chain. And I think also back in 2020 or 2021, when a new chain or a new protocol popped up and you had like some new amazing features, hey, we are going to process 1 bazillion transactions per second. We are going to have a distributed security layer. We are going to have zones of liquidity, etc., etc. Back then, those were the arguments that made like VCs invest in you or made the general public be interested in you, which is not the case anymore. Like we every new chain that launches today, it just goes almost directly straight to zero. Or when you look in general in the crypto market right now, tokens have to have utility. Most of the tokens in 2020 or 2021 didn't have any, and even like until 2024, I would say altcoins were somewhat a decent bet for investors. And I would say it's not the case anymore, because people just understand that most of the tokens are vaporware and they are not going to go up whatsoever. And we've seen it, through this bull run, if you want to call it this way. The BTC outperformed essentially all the altcoins, besides Hyperliquid, for example. But yeah, I think people just realize that fundamentals matter, but not as much as before. And I think your product market fit, your moat, and your positioning and the role your token plays have um, way more importance now. And I think this is what is reflected in price. So getting back to your question, I think uh, when your fundamentals are solid and your token actually has a utility and you have a way to generate money, yes, it will be reflected in price. So I would say both things are important as it translates the excitement that the public has for your token. But at the same time, you have to have a deeper understanding if you want to understand why your investment is underperforming or overperforming the others. So I think if you combine both, you have the perfect cocktail of um, I don't know, information. I would say, yeah.
In equities, alpha from fundamental research gets arbitraged away fast. So in crypto, where does persistent edge still exist, and how long do you think it survives once more capital moves in?
I think in crypto you have a certain information asymmetry sometimes. And I think we also have a problem with insider trading in general because crypto isn't regulated as much as equities. So in equities, people are prohibited from trading this information, while in crypto, it's essentially a free market for all, and you do whatever you want, either through a poly market or through buy the token directly or by shorting it or whatever. Um, I think sometimes it's just either for a research platform like ours or just people digging through the recent announcements or documentations or governance forums, which are still a source of a lot of like alpha or decision making in crypto. I think by digging through those, you can actually establish your own idea about what you think project should be valued at and how it should be priced. So I think the what we have in equities is not really comparable to crypto because you have a lot of moving parts in crypto that are actually public that but that people don't really pay attention to. However, I do believe that we will converge towards something which is more equities like in the coming years, just because we are already seeing this in crypto today that most protocols are more or most blockchains are now optimizing to be more TradFi like. So it means generating more revenues. It means actually giving a meaning to its token. It means that embedding the token in every single aspect of the protocol, which was not the case before. So I think we will still have this asymmetry, and I think this is why it's still important to look at some fundamentals. But I also I really like this term, which is called nerd sniping. Basically, you can get nerd sniped by an idea that you have because you have found a technical solution in a protocol or in a token. The most important part is not to get nerd sniped by this. It's not to say, "Oh wow, now I understand it. It's the future." You actually have to ask yourself if the solution that is presented is actually solving any issues, or if this is basically something that a problem that we have created in crypto and that we have found a solution to. So there's other things that I would like kind of pay attention to today in terms of fundamentals, but I would say the information and the way it goes around in crypto, it's really asymmetrical sometimes. So you have lots of insider trading, you have lots of problems with this, but at the same time you'll also have some opportunities that the market doesn't see yet, and it's not easy to find those, but whenever we do, it's something that we are really proud of. It was the case with Hyperliquid. It was the case with Ethena, and we found a bunch of those in the past about the XPL airdrop, for example, or XPL presale. These were like the asymmetries that we were seeing in the market, and we have talked about. But the thing is, and it's something which is quite common in crypto, is that people don't pay enough attention to those. So even if you talk about something that you know is going to be right and is going to maybe make people money, if people don't look at it, like if there is no trend around it, people will not pay attention to it. So it's really hard, but for those that are interested in these things, yeah, it's definitely an edge that they might have in the market today.
Think it's also a matter of time, right? Because when it comes to TradFi, there is already some sort of an investing culture where people got used to be advised to think long term and to be patient and to be careful and so on and so forth, and to diversify, right? Invest in ETFs and funds and so on and so forth. But in crypto, we still have the stigma around it that, yeah, this is the place where you can make 100x or you will get scammed, right? So, and yeah, we're talking, of course, about the retail and the vast majority, but I'm pretty sure that the new entrants in the face of institutions, who are, according to some, are actually one of the oldest, if not the first entrance, by the way. But now it's getting all institutional, anyways. I think that can affect the space in a really good way, in my opinion.
Yeah, sure. But one thing we are seeing, and I think it's kind of under talk today, it's the fact that institutions today that are more interested in deploying their own products on chain in order to have a larger distribution rather than using what we have built in crypto. And I think it's something that we always thought that institutions will come in, they will buy our bags, and they will be the ones that will drive the next bull market, right? Um, the problem with this is institutions are coming in, but they are deploying their own stable coins that they are the ones collecting the yield on. They are deploying their own tokenized funds that they collect fees on. And we are rarely seeing any institution actually being interested by products that are deployed in crypto, unless it is for basically just deploying their own solutions to earn more money and distribute their own products. And I think it's the case with private credit. I think it's the case with lending. I think it's the case with stablecoin issuers. It's the case with banks. And so you have to take this into account as well, into like this whole thing. Right now, the solutions we have built, I feel like we are repeating the same mistakes as TradFi did in the past. We are seeing why TradFi has some guardrails that we don't have. We are seeing the problem with hacks that are still persistent to this day, and we are seeing the misconception between decentralization and security. Like most of the time, protocols and chains will just hide behind the fact that they are decentralized. And whenever a hack happens, they're like, "Okay, we are not responsible. We are decentralized." Yeah, but sure, but people have lost money in this hack. And so, if you think that Goldman Sachs will deploy billions of dollars into your protocol and get a risk of getting hacked, you just have to be delusional. I think it's more about seeing what institutions have actually used, and one of these clear examples is Trade XYZ or Hyperliquid, because they are open on the weekends. And I had this conversation with Nexus. Trader Nexus he's a really cool guy, by the way. If people want to go and follow him on Twitter, and he told me something that kind of stuck with me, and it's that Hyperliquid is on a timer right now, because my interpretation of what he said is Right now, Hyperliquid has a moat and an edge because its trading is open on the weekends and after hours for equities and for commodities, metals, whatever. However, if we are seeing traditional markets move towards this structure as well, we are going to see a little bit less of product market fit for Hyperliquid and lose its mode. So I think the most interesting thing for me is to see how they will adapt to this. And I think this is one of the things that people should really pay attention to. It's the fact that not any other product has been used by TradFi like Hyperliquid has so far. And I think we have to take this into account, like when looking at the space that we have. There is a reason why institutions haven't used any other protocols in a meaningful way, and why they are not buying any tokens just because they don't represent anything. So it's something that we tend to not talk about and basically like hide under the fact that hey, it will come at some point. But I actually think that maybe the issue is stemming from our own designs and our own solutions that we have built that are not suitable enough for these institutions.
Democratization and independence, anonymization, and things that are alike, right? The adjacent dimensions, they lead to a high level of uncertainty, and regulated bodies cannot always invest in something that could be partially financed by terrorists or and
Mm,
so on and so forth. And that's a very, by the way, that's a very legitimate concern that I have actually heard and did got confirmed also by the head of the research of CoinShares, that who I also uh, uh, ask this question: why aren't institutions delving deeper into DeFi than they do at the moment, right? And that was one of the main concerns. That's the first thing that he mentioned. I kind of understand it, right? Yeah, from one side, the space is seemingly empowering the structures it was supposed to challenge, at least, right? Um, on the other side, I kind of understand these structures, because if they make this kind of a big mistake, it can cost people a lot.
yeah,
So I
but
think,
I mean,
it's a double-edged sword.
banks are financing terrorists as well, so institutions are still deploying money there, right? But the thing is, like, crypto has always been seen as something which is for illicit money transfers, for terrorism financing, drug dealing, whatever. You can put like all the crimes and say, hey, crypto is used for that. I think this argument has kind of been becoming weaker and weaker because right now you have ways to prevent these things from happening. So it's like, I mean, if you want to make this argument, it would actually make sense, especially like what we saw with the Strait of Hormuz, when Iran actually demanded to pay either with yuan or Bitcoin for the passage of the ships in the Strait of Hormuz. So it's like, sure, crypto can be used for that, but then cashing out this crypto is a little bit harder. Um, so I would say as we get more and more proficient or mature as an ecosystem, these concerns will be less and less important. But I think one of the main problems it's the security that we have in the protocols that we have built. It's the risk of hacks, and it's the lack of accountability for when these hacks happen. And at the same time, we are, I think, still lacking the utility case for the token, so they have no
Mm.
intention of buying those because they don't want any exposure to the ecosystem. So I think these are like the three things that are important to institutions.
Do you think that we're moving towards a point where tokens are imitating the purpose of stocks of equity?
I mean, they should, right? Because otherwise, I think when the token is only used for governance, like, what's the point? The governance is already controlled by the largest token holders in most DAOs, if you want to call it this way. The founders and the founding team have the most votes anyway, so they will pass any proposal that hits the governance forum. So I think yes, they should converge towards something where um, token holders actually benefit from a protocol making money. I think it should pivot towards something that actually make sense for a token. They should have some other utility besides governance, because nobody's interested in governance, and they should be indexed to the success the protocols have, or to their revenues. So yeah, I think we will see this happen, and I think we got away for a long time without indexing the token metrics towards like the success of the protocol. So
There is a version of the crypto thesis where on-chain transparency is the great equalizer as retail finally sees what institutions see. Now, that clearly hasn't played out, or at least didn't play out completely, right, for 100%. So, what does that tell us about where the real edge in this market actually comes from?
yeah, I think we're coming back to what we discussed before, right? It's like you will always have insiders that have privileged information on what is going to happen in crypto. So unless we are becoming proficient enough to forbid insider trading or information leaking beforehand, I mean, this is happening in the U.S. as well right now with the Trump administration. So I don't know if is crime legal. Essentially, this is like the the real question to ask. It has been legal for a long time in crypto. It is becoming more and more legal in the TradFi ecosystem. So I don't know, dude. I think it's more about people actually willing to go an extra length to learn a little bit more and to drive their own thesis more than like getting everyone to the same level. I think it's always been true in all the markets. So yeah.
And when you look at the protocols on chain data, what patterns most reliably predict a project is about to lose relevance before the price reflects it?
Mm, I think on-chain data is quite interesting, but I think once the transactions have happened, you have really short time to react, or you have really short time to understand why they happen. Um, Once again, I think if we look into the market structure today, the on-chain flow. So, for example, we can talk about two things here. We can either talk about large buys of crypto, like of tokens, or people deploying capital more to buy the tokens, or we can talk about like inflows into a protocol and their impact on the protocol in the long term. So if we are talking about token buys, I think a lot of it can be attributed to either insider information, so you have little time to react because all the insiders have already kind of got it, and it's like buy the rumors, sell the news thing. So whenever you have like huge buys, you should still be really careful about why these buys are happening. And most of the time, when the news drops, essentially the insiders are selling because they realize their profit. Um, on the other hand, when you have huge inflows into protocols, you have to understand like why these inflows are happening. So either because you have a huge entity that decide to deploy there, or if the protocol will really benefit from it. So I think these are the two things to consider. And if the protocol benefits from it, the price of the token of the protocol, if it's not indexed to the success of the protocol, once again, if the token's only role is the governance, well, it won't be reflected in the price. If it's sticky capital with a big announcement, then maybe in the long term the token should benefit from it. But I think once again, like most of the time, you benefit from information asymmetry by doing your own research and by trying to drive a thesis for your investment rather than trying and trade the news cycles, right? So this is like kind of my point. It's you can try and trade this news, but at the same time, you should also be careful about these things, and you should basically invest once again in the longer term, like for a longer time frame.
Yeah, and regarding the Oaks Market Index, it's core sentiment conditions, right? And how much of crypto returns are driven by macro versus project-specific fundamentals, and has that ratio changed now?
Yeah, so for the index that we have, it's only a Bitcoin index. So it's essentially what I want to call it. Like I like to call it an optimized DCA for Bitcoin, because the DCA, it's basically like buying a portion of Bitcoin every X amount of time. Essentially, what Oak Index does, it gives you a score between 0 and 100 on the. It takes 5 factors together. It puts them together with each of the factors having an assigned weight to those, and it gives you out a score that allows you to. So 0, it's not buying. 100, strong buy. Essentially, if you want to DCA your Bitcoin, we have run several simulations for this index. And essentially, if you are buying every time the indicator is above 50, so a little bit more, you are an active buyer most of the time, and you are outperforming a normal DCA by 60%. So over a year. So this is like the idea behind this index. It's optimized BTC DCA. We are not doing this for other tokens because you have to take into account more factors. So this is what we have tried to do with this.
Makes sense. And if you're managing your own capital in crypto, what does your actual decision process look like at cycle tops? And what signals from your own platform do you weight most heavily?
Yeah. To be honest with you, like a few years ago, I was a really active allocator towards various protocols, various projects. But at some point, I just focused on building my company rather than trying and trade, because I think when you are trading, you have to be really cautious about like your capital. You have to reallocate it constantly. You have to take into account like the number of time it takes to do so. And I decided to focus on building my company. So right now I trade a lot less than I used to. Um, but for example, I decided to allocate to Hyperliquid because of the research we were doing on Hyperliquid, because of the thesis we were driving on Hyperliquid. And I tend not to sell because, once again, I'm seeing this as more of a long-term bet rather than like a short-term benefit. So I'm just holding the tokens that I hold. I don't sell this much, and I have like a bag of stables that I deploy every now and then into some tokens because I think they are interesting to hold. But otherwise, yeah, it's I don't trade that much. I'm just trying to essentially, what you have to understand is what we are talking about on Oak Research. We are actually looking into this ourselves because we think that if we decided to look into this thing by ourselves, it means that maybe other people might be interested too. And so this is like the whole purpose of the research that we publish. It's the things that we think are valuable to look into.
I see. And the correlation between crypto and traditional risk assets has increased, right? So at what point does that correlation break crypto's asymmetric return profile? Does it change the investment thesis entirely?
Hmm. It's I think we are getting to a really tough point where DeFi yield, which was supposed to outperform any other traditional yield source, that would reward you with a higher interest rate because you are taking more risks in DeFi. It's actually coming down, and right now, I would say if you are deploying into DeFi, you are taking all the risk, and essentially, you are not getting an asymmetric reward. So I don't know. It's really tough to kind of evaluate those things because I would say BTC is its own market class now. It's like Bitcoin and everything else. So if you look into Bitcoin, it has become somewhat of a macro asset as well. It has the largest liquidity in crypto. It has 24 out of 24 hours trading. So if you are an institution holding Bitcoin, essentially you always have this liquidity available to you. So I would say Bitcoin will remain correlated to most of the risk assets in the market. Altcoins, on the other hand, will be a little bit more driven by narratives and like shifts in what is happening in crypto. So it will be, but if Bitcoin is doing poorly, these assets will do poorly as well. So in the altcoin market, you have the correlation to BTC on the one hand, and then you have the narratives that are happening in the market today. So if you have this, if you have to make a bet, I would say if you are hesitating between Nasdaq and BTC, essentially you have to know that you have somewhat of a similar profile risk. Just Bitcoin will be a little bit more volatile. Then it depends on days, right? But most of the time it will be more volatile. And if you are betting on altcoins, just be aware that these are really risky bets and that they will be, on the one hand, correlated to Bitcoin and then correlated to their own sector in crypto and their own protocol as well. So I think the lack of correlation in the altcoin sector will be driven by these narratives, and then BTC, it will be basically like geopolitical things that are happening in the world. So it will be more macro for me.
What about Ethereum?
This is a tough one.
Mhm.
um, I'm a huge believer. Well, I'm a huge believer in Ethereum. I'm less of a believer of ETH. So I do believe that most of the innovation that we have in crypto today happens on Ethereum through the various protocols deploying there. And essentially, if you want to build a serious product, you are deploying this on ETH today before going elsewhere. Um, I would say one thing about Ethereum is that while Bitcoin has its role of a macro asset, Ethereum doesn't know where to stand. Uh, and at the same time, we still have inflation on Ethereum, even though we have this burning of ETH on every transaction. We are seeing that ETH is now trying to optimize for faster transaction processing and everything around it, while before it was supposed to be the role of L2s. And so I think one of the problem with Ethereum is that it has no narrative and it has no real, I would say, person to represent it in some way. Besides maybe Tom Lee from Bitmine, but once again, like it's not essentially a really good alternative, let's say. So yeah, it's really tough for ETH, to be honest. And if you want to value Ethereum based on the security the network should have, ETH is overvalued. If you want to value Ethereum based on the transactions and the use of ETH for transactions, it's way overvalued. So unless you believe in um, unless you believe in the fact that Ethereum will capture at some point the returns, some of the returns of DeFi, or if it will have some use cases by institutions that will actually start to accumulate ETH in order to participate in the security of the network, then yes, it would make sense. But at the moment, this is why we have not seen Ethereum outperform essentially anything during this cycle, not even Bitcoin. So yeah, it's really tough for ETH, I would say.
I agree. Now, coming back to Oak Research and the project discovery. When it comes to early stage project coverage, that's one of the Oak's core features. At what point in a project's life cycle does fundamental analysis matter, and before that point, what does the decision come down to?
Huh. It's I think it depends on the protocols, right? It depends on the projects. Once again, you have to take into account like where the project fits in the current market structure. If it actually has a way to sustain its evolution in the coming years, and if in general the protocol makes sense. So it's on a case by case basis. I would say it's you don't take into account the same things for from one protocol to another. You have to look into the need for the protocol to actually exist in crypto, and you actually have to look into what the protocol is trying to solve. It doesn't mean that protocols that are not solving anything will die right away, and that you have um, no money to make on those. It doesn't mean this at all. It's just about like the duration and the risks you are willing to take for your investment or your capital deployment. So yeah, it's on a case by case basis. I think fundamentals do matter, but once again, it's more about like, okay, what is the thesis that you can drive for this protocol to exist in the long term? Um, and if the protocol is doing something that others are already doing, then you have to ask yourself, okay, is it actually different, and what is like, why is it different, and why it matters? So there's other things I would say you have to take into account in order to talk about like early stage protocols. And we are seeing lots of shilling going on Twitter. Most of the time, it's people saying, "Hey, you should deploy your capital here because you have huge incentives or airdrops or whatever." But then once again, like holding a token for from these protocols, most of the time, it's not a good risk reward, to be honest.
Let's stop for a minute. Here's a brief moment of context for those who may not know me. My name is Nasib Fathi. I'm a scientific researcher in the blockchain space, and I work with executives and organizations as a growth and media professional. My focus is crypto at the intersection of institutional finance, market structure, and regulation. You are watching the NFK podcast, where these topics are discussed through conversations with people shaping the development of digital assets space. And if you had to identify the one sector or vertical in crypto right now where fundamentals are most underpriced by the market, where sophisticated analysis gives the biggest edge, what would it be?
Hmm. I don't know.
Yeah,
it's
we're in
no, it's
such
a,
an uncertain, yeah, like this
yeah,
gray area in a way. Yeah.
yeah, and I think people just in general are not interested in crypto anymore. I would say it's a real tough question, especially right now because we don't really know where we are heading. Um, I think I think social fi is bullshit. I think privacy is an interesting feature, but I don't think it's a narrative that will sustain its course. I think some protocols that will be offering privacy are interesting, but I don't think holding the tokens for privacy is interesting enough. Um, I don't think, yeah, I already talked about social fi, even though it's heavily pushed by Vitalik. I don't believe in it. Quantum resistance, I think we are years away, and I don't think crypto will be the first thing to suffer from it. So same there. Like if your only like benefit to the crypto ecosystem is being quantum resistant, but besides that, your protocol is bullshit. Fine, like congrats, but you won't make it. Um, DeFi is interesting, but at the same time, it's the most crowded space at the moment, and it is facing its own fair share of criticism happening right now. If we are talking about interoperability, once again, like what is the token for? How will it be used? And if you look at bridges or oracles, which are like parts of DeFi and interchain, most of them are just straight away dumping because people don't see the utility for those. So when you look at all these sectors, there is not one that stands out at the moment. So you can talk about perp trading, which is like hyperliquid. But hyperliquid is really interesting once again because right now you have lots of people from TradFi using it, and you have lots of genuine interest from people that are also farming airdrops from TradeXYZ or from hyperliquid. Um, so yeah, these are like the things where I think in perps in general, hyperliquid is like there is no second best for me. So yeah, it's stable coins that don't really have tokens besides Ethena, and it's been doing really poorly lately as well. So yeah, it's really tough to be honest.
Now a follow-up question, what would DeFi 2.0 look like?
uh, DeFi 2.0.
Because
I
I'm close to asking you what are we doing with our lives now. So
no
still
exactly,
staying in crypto and stuff like
no
that.
exactly
Yeah.
exactly no, and it's a totally legit question, and I ask this question myself every day. But
Yeah.
at the same time, when I look at TradFi, I'm not willing to go into TradFi and like becoming a full-time trader or whatever, just because I don't see a difference between crypto and TradFi at the moment. Like, I think crypto has lots of opportunities. I think it has lots of interesting use cases, and I kind of got used to using my own wallet to deploying my capital 24/7, doing whatever I want. So, which is like itself a mode, right? Um, I don't see myself picking stocks because it has lots of moving factors to those, especially like altcoins in some way. I think DeFi 2.0, we will converge towards something where tokens actually have a utility and they are deployed in a way where you can actually benefit from a protocol doing well. Um, and I think we will have a clear distinction between TradFi that uses protocols and DeFi that remains a marginal use case for crypto degens. I just think that we are in a really difficult limbo at the moment because we are still we it feels like we haven't learned anything from the previous cycles and we're still repeating the same mistakes. And we have lots of idle money sitting in DeFi dinosaurs, or I would say altcoin dinosaurs that isn't moving. Like you can talk about Tezos, you can talk about Algorand, you can talk about like all those projects that are sitting on on millions or and even billions of dollars that are not doing anything. They're not even deployed anywhere. They are not generating any revenue. They are just paying salaries for the people that are uh, sitting on the board of these companies and that just benefit from being early. So I think once this money runs out and we actually have some interesting use cases and we have interesting allocations of capital that become like more that tend to happen more often in crypto. I think until then we will just be playing with our own like PvPing each other, trading against each other, and not having any like real value. I would say, yeah,
We over the course of this around an hour already, we've talked about mostly DeFi, right? But we
yeah.
haven't try touched upon CeFi. So centralized exchanges are the primary on-ramp for most retail capital, but they also run proprietary trading desks, hold customer funds, and in some cases they've been caught for on running their own users.
Mhm.
So how structurally compromised is the exchange layer of this market, and does research even account for that risk?
I mean, sectors have been around for as long as like crypto has been around, right? Like since 2011, I would say, sectors have become the main point of onboarding for people. Well, we are seeing this convergence from DeFi protocols as well. Like when you're looking at EtherFi that deploys its own debit card, when you look at Aave that releases its own app, when you look at Plasma with Plasma One, we are seeing neobanks emerge from decentralized protocols, and I think at some point the DeFi protocols that are deploying their somewhat centralized solutions will start become interesting. Um, but I think success will just be where they are today because it's the most efficient way to get access to crypto. It's where most liquidity is still at. I think right now, what we are seeing with DeFi protocols getting hacked almost every week, especially in April when we are recording this podcast, you are more secure by holding your money on a SEX. So um, I think they still have that part to play. I think it's more about ethics and like things that happen on s- I would say CGFI in some way, but yeah, on sexes in general. I think we need to have more accountability and we have to have proper regulation for those because most of the time when you're seeing what happened with Rave, all the centralized exchange listed Rave, it rallied to top 15 market cap coin, and then it fell down by 95% because of market manipulation. Like these cases don't have to exist anymore. When you're looking at most of the projects that got listed on Binance Alpha, which is their launch pad or whatever for tokens, they are all down. Like there's no protocol or no token that actually had a good price action there. So sexes have to, I would say, up their standards to actually serving customers and not making the most money. But they are also those that have to pay a lot of compliance and like getting regulated and stuff. So you have to take these things into account. But I think it's a choice, right? For people who are in crypto today, the good thing with crypto is you have a choice. So you can buy your crypto through SX first before moving it elsewhere. So you move it to your wallet. And I think this choice, it's up to the people to decide what they are the most comfortable with. And I would say, like, I would not push people to use DeFi unless they feel comfortable enough for it and they are like aware of the risks they're taking.
Market makers in crypto operate with almost no disclosure requirements compared to traditional finance. They can simultaneously provide liquidity, hold large token allocations, and have advisory agreements with the projects they are quoting. Now, when Oak evaluates a project's liquidity score, how do you factor in the possibility that the liquidity itself is manufactured? So we have market makers.
Um, I don't think necessarily the fact that market makers exist in crypto is a bad thing. I think without market makers, their liquidity would be even worse. I do think that we have some bad actors in this space, in the market making space. But I also think that market makers get a lot of the heat when something happens, while maybe people should look more into the protocols and the blockchains that decided to allocate to the malicious market makers. Um, I think they are an essential part of the crypto, and I think like looking into liquidity, it's more about, well, uh, can you actually buy a token without necessarily like losing a lot on slippage? So it's more about like looking at what is happening in the market. Um, at the same time, hmm, for I think it's not fair to say that everything is manufactured on the liquidity side. I think it's more about making trading efficient. So if today you launch on, I don't know, you're talking on Uniswap, right? It would be really hard to guarantee a fair price for everyone. And essentially, if you are getting there early and you decide to dump everything, you will affect the market in a really bad way, and people will call your project a scam. So
Mhm.
um, it's it's something that you have to think about before like engaging with market makers. I think once again, I keep coming back to this example, but Hyperliquid didn't get any market makers at first. They listed on their own exchange, but because they had already a really deep liquidity, it was fairly easy for them to have this type of um, possibility to do so. Well, it's not really possible for most of the projects. So I do think that market makers are necessary. I do think that protocols should pay attention to the market makers they're dealing with, and I think they have to be proficient in their choices. So um, yeah, I don't think market makers are essentially a problem, and I don't think it's fair to say that the liquidity is manufactured. I would say it's, once again, it depends on the protocol and the token and the market maker. But most of the top market makers like Wintermute or Flowdesk or I don't know, they just make the market more efficient, I would say.
Mhm. And banks now are now entering crypto. We're also touched upon that, right? We have the topics of custody, tokenization, stablecoin issuance, and so on. So what the
Mhm.
same institutions, banks that resisted crypto for a decade are now positioning to control its infrastructure. Is that legitimization of the asset class, or is it something else? And does it change what alpha looks looks like going forward?
I would say they just know there is money to make, and they are. I mean, so if you look at this from a person that builds a company, right? So let's say you are okay. I will take an example with podcasts. Okay,
Mhm.
so essentially, I don't know your background, what you did before, but when you decide to launch a podcast, there is always a risk that either this doesn't work or that it works. Basically, it's two solutions, I would say. On the one hand, if it doesn't work, well, you've just lost some money and your time because you have invested in some lights and like some software and editing, etc., etc. So you're essentially losing money in order to launch this podcast. However, if this works, at some point, you potentially will make way more money to offset all these costs. So for banks, it's essentially the same thing. They have to hire a bunch of people to manage their crypto exposure and like compliance and all of this. And they are betting on the fact that, for example, the stablecoin sector will grow by a tenfold in the next 30 years. If they are early in the space and they actually control the infrastructure, their investment will pay off. If it doesn't, it will be a small loss on their balance sheet at the end of the year. That doesn't really matter, materially matter at least, because most of their expenses don't go towards this. So it makes sense for these actors to try and take advantage of the ecosystem or of the certain narratives like stablecoins, lending, tokenization, etc., etc. It also allows them to distribute their products in a more efficient way and getting access to a broader audience of people, especially from the jurisdictions, for example, that they are not able to serve. So, for example, when you think about U.S. customers or U.S. banks that are able to serve U.S. customers, they're not able to target Europe directly. They have to have a branch in Europe in order to target the people there. Through DeFi, they can just allow anyone to invest in their tokenized assets or in their stablecoins, hold it, and collect money on it. So I think it's an interesting bet for institutions to get into this field. Is this something that makes crypto more legitimate? I would say not crypto in general, but the some of like a subset of features that crypto has, like tokenization or stablecoins. Yes, it makes sense for them. Um, what makes sense for everything else? Not really. Unless we have some really interesting use cases where they start holding tokens, participating in governance, implementing new features into protocols. Yes, at this point, it will become more legitimate. At the moment, it's just a bet on the fact that this sector will grow in the coming years. They want to have a piece of the pie in order to get more money. So I think it makes sense.
AI is now capable of generating coherent crypto research reports in seconds. Now, Org has integrated AI-powered recaps. Where does human research judgment still have irreplaceable value, and where has it already been commoditized?
Yeah. So we are using AI for some of the features that we have. So we have two recaps today. We have the daily recap, which goes over the news. It selects the news from reputable sources and generates a recap for the people that are interested in learning more about news. And we have a weekly data recap. So the weekly data recap looks into the most significant data changes like TVL drops or token price surging or something else, and it allows people to get access to some data recaps as well. So it's really good for recaps. It's really good for looking at things all over the place and then just putting them in one place. I think what we have kind of pivoted away from is these quarter recaps I was talking about today. For example, Llama AI, the AI which was developed by DeFi Llama, I use it almost daily to get some access to the data that I wouldn't be able to get access to. But I think besides that, when you're trying to write your own thesis for what is happening in crypto and what is like really interesting, and then you have to try and create an investment thesis for these tokens or these protocols. I think AI is not fully aware of like the inner works of DeFi or of some things that are happening in the market that might affect it. So these other things I think humans are needed for, and humans with experience. I spent over 6 years in crypto, so I've seen like the DeFi Summer thing. I've seen like the L1s popping off. I've seen the birth of L2s and all these things. And I think this is where you have like an edge as a person because you've seen many things happen, while AI can just look at, I don't know, like sponsored articles that say, hey, this chain is actually the best one and it will be the fastest one, and actually it makes sense to invest in it, while you as a person, you actually know what is happening in the backstage. So these are the two things. And I mean, it also makes sense to use AI in research, because when you want to get access to lots of data or to some things that actually are interesting, you would use AI, and like there is no hiding behind it. And I think if you're not using AI, you're just wasting your time and resources that like instead of getting answers in seconds. However, you can drive your AI in order to be quite proficient and intelligent about the sources that it uses and about the things that it has to take into account. But then you have to be a person who is knowledgeable enough to see when AI is hallucinating and it says some bullshit that you kind of know how to correct. So I think this is where the human is needed. But once again, it's humans that are having in the place for a long time. So I think it makes it harder for people that are just getting into the ecosystem and that are trying to get a job, for example, in crypto today, especially on the content side or the research side. If you're a junior in this space right now, it's really, really hard, I would say, to get some recognition or knowledge or something else. So you have to grind a lot in order to be better. Um, but it's a really useful tool, but I don't think it replaces the humans entirely. I just think it makes it harder to stand out, and I think this is like the whole point. This is why we are not doing any technical analysis anymore. This is why we are not doing quarterly recaps anymore, because you can just get those through AI, and this is why we focus on something else, which actually makes sense for us to do so.
If AI can process all public on-chain data and sentiment signals faster than any human analyst, what is the sustainable mode for research platforms such as Oak in their in 3 or maybe 5 years from now?
Yeah, I think once again it will be about like thesis-driven approach, and it's about like actually talking to people and understanding why they're doing things that they are doing this way. I think it's one of the things that people kind of forget is that, for example, when we write our research, we tend to reach out to teams to ask them for their comment or ask them some tough questions that AI wouldn't be able to do. So you still have to have like this bit of journalism in research, where you actually talk to people and try to understand a little bit more about why they're doing things in a certain way. And also, I would say, um, I listen to some podcasts with founders and people that are building things in crypto. And when you listen to those podcasts, you actually get lots of your questions answered. And it really helps you to understand why they are doing things in a certain way that you didn't expect them to. So I think this is like one of the parts where humans are still relevant as well. It's just human interactions, talking to people and asking questions. And once again, yeah, just driving a thesis to better understand where things are headed.
So human AI co-working, right? That's the
Yeah, yeah.
that's one of the those theses in a way.
Yes, yeah. When you need access to data, when you need access to news, when you need some aggregation, AI is perfect. When you need to go an extra length, and this is what we are trying to do at Oak Research, you need to get a little bit more. I would say not creative, but like get your hands dirty a little bit more.
Does widespread AI adoption in crypto research reduce alpha opportunities?
I think it does, because most people, well, it doesn't reduce alpha opportunities. It just makes people read less and just ask AI for its opinion, instead of forming like an actual thought process. And I think one of the things what you have to take into account into like when you are researching a protocol, you have to take into account the team as well that is behind these protocols, because you would have to look into their engineering capabilities, you have to look into their financial literacy, you have to look into their background. And I think one of the great examples is the founder of Ethena, whose name is Guy, who actually comes from TradFi. You understand that he has knowledge of things that didn't work in TradFi, and he actually understands some things that were overlooked in crypto before. And so when you listen to him talk, you know that his decisions actually come from a informed background. So even though you have lots of AI slop and AI content in general, you can still make some judgment calls on your end based on what you know about the teams, what you know about the protocol and its design, rather than fully trusting AI to do this for you. And we are coming back to the original thing. It's like when I started crypto, there was no LLMs or things that would like just give you recaps every day, or you could just ask it a question. You have to go and dig through the documents. You have to actually read stuff, and you actually have to understand it. And it's this thought process that you kind of train yourself to build as well. So these are the things that I would like pay attention to, and it's just I think we are getting dumber and dumber by just using AI and not thinking enough. And I think it's really important in an industry where your decisions actually impact your financial health to do so. So yeah.
And the closing question: where is the best place for listeners to follow your work, access Oak Research, and stay updated on what you're building next?
Sure. We have our website, oakresearch.io. You can go and look at our research. You can go premium if you want to have access to additional features. We are publishing every week a few articles of the things we are looking into. Our X is OAK_RES for English speaking people. We also have a French one, so for those who want to speak French as well. And yeah, otherwise, yeah, my Twitter is Artem_Oak. I just talk about my things, like my thoughts and what I have learned and the things that I'm looking at. So yeah,
I
almost everything is public. You can just go and watch it.
I will include all the links in the description. So,
Perfect.
Artem, thank you for joining and sharing your perspective.
Thank you very much for the invite. It was a pleasure.
And to everyone listening or watching, like, subscribe, or follow both of us and share this episode with someone curious.